Yeah, I mean, for me, it was more of a, let's say, curiosity, right? So I was, writing about different topics, right? Or okay, I used to write on digital transformations and all those interesting topics like AI and so forth. And then there's a lot of articles I used to write about, and then the pandemic comes in, and then like at the same time I was also looking into cryptocurrencies and so forth. It was not by accident. It was more of being curious, right? Because I wanted to do a little bit of project with one of the team member, and then he explained me about the whole concept of blockchain, and I was still skeptical myself about the industry, but yet curious. Let me put it this way: yet curious, and I was open about learning. And then I started to explore like what it is, like why people are into this, right? So and that led me to sort of go into this direction of really finding the right person, finding the right sort of people to explain me about the industry and the challenges and so forth. That's how I started to sort of find writers as well, like who can help me to write and express themselves. And last year, I think there was some interesting cryptocurrency establishment. They also wrote some articles in my platform, and then I had a chance to also talk to one of the individuals who are contributing on the token, one of the tokens. So that was the start, I would say, and then now I want to go into the next phase where I start to really go deeper into the conversation and then try to learn from you guys. So that's
Yeah,
where I think we are at. So if that
yeah,
answers your question.
totally, totally. And yeah, I'm always happy to um, point people to either communities or specific people or reasons that um, this is interesting.
Yeah,
Um,
yeah, absolutely. Okay, so let's get started. I would like to maybe ask you to, go into the moment of your career when you decide, okay, this is the journey I want to take. What was the beginning of the moment like?
it was interesting. So I was in college, and it was just after the I was in college just after the 2008 financial crash, and that kind of was, let's say, interesting to many people. And you know, uh, my family experienced some economic shakeup, but also just looking around the city. I was in Philadelphia, and I would see, an elderly couple, like in their 80s, standing on the street with a line of luggage, and just immediately, and just looking like they didn't know where to go. And it was an amount of luggage, like I'm talking a dozen bags or so. And this was something I was seeing more than once, of people who looked to be in this situation where it seemed like they had just lost their home and had nothing in front of them. Everything that they had depended on was gone. And, um, eventually, people seeing things like that led to things like the Occupy Wall Street movement in, I think, 2012 or so. Um, but at that time, um, I I I was in art school actually, and kind of going through a bit of a crisis of what is the use of art, and okay, this is reality, and these are ideas, and how effective can they be by influencing those, or am I missing something? And a friend of mine started attending George Mason University at their economics program, and whenever I would come down and visit him, I would sometimes allegedly maybe sit in on some of the classes. Um, Not for credit though, so I don't think that counts as stealing education. And um, that opened me to kind of a much more concrete way of exploring a lot of these incredibly important existential, like your life depends on it issues, as well as some larger, interesting or more obscure issues that come up. And it was at this time where we were seeing kind of the extremes of the current system that we operate within. and I started attending economics conferences and started following another podcaster that I love, Russ Roberts' Econ Talk podcast. Became like a lighthouse in the fog of highlighting both kind of detailing the history of policy and everything that led up to the financial break, as well as economists that approach these issues in a much more human way than just econometrics alone. And what I came to know is kind of the Keynesian view of the economy is just this big machine you can steer, and every once in a while you stall it, and that's just what happens, and that's part of the boom and bust cycle, and it's natural, and more towards this view of economy as this is an understanding of how human beings act in masses, what orders emerge from chaos, what can we see in case studies of, well, when you try to build a Millennium Village, this is how that impacted the quality of life in an area that has hunger problems, versus if you do a money drop, versus all of these issues. And eventually I ended up at this student economics conference up in Philadelphia. I believe it was held at Drexel, and these were very, for lack of a better term, and a term that's been totally ruined by now, libertarian students. And they were talking about, I was already starting to get into, Hayekian economics that talk about kind of empowering individuals from the bottom up to inform the system that everyone engages with, and Ludwig von Mises' idea of praxeology as economics, or human action en masse. And at an after party at some like rundown frat house for this economics conference, I walked into kind of a circle of students talking about the Silk Road, talking about this might have been just before the Silk Road, but they were talking about blockchain technology. They were talking about Bitcoin specifically. And in the run-up to that, I was looking into money to the extent of, like, as a BFA art major, I made my entire junior thesis about designing a new monetary system, because I had geeked out to the point of seeing that there was a problem with the idea of fiat currency in black box ledgers, in unpegged to anything of common value. And so had actually ended up writing this very convoluted, what you could say, it wouldn't qualify as a white paper, but I found that I could write a bill to Congress, so that was part of my art piece, of the Monetary Reform Act of 2009. And it was essentially a nonsensical stablecoin. So it incorporated, before I had any knowledge of these terms or what you could actually do in this space, and I was still kind of trying to make it art and not really giving in to full-blown studying economics or anything of that kind. And it was basically pegging to assets found in a nation. So the US has like gold and copper and etc. And pegging different currencies, pegging the currencies to kind of a definitive basis of those, and then allowing for a 4% GDP lead on scaling, similar to kind of some ideas Milton Friedman threw around at the Chicago School. But in the end, it made no sense. It was it was much more art than science. And about 6 months later, I ended up at this after party for this conference, and in one sentence or so of describing what Bitcoin was, I was like, okay, now I can see the puzzle. Now I can see the missing puzzle piece. Now I can see that that's the one that fits. This concept of cryptocurrency that not only solves, the hard money problem, and then the convolution you bring in when you can't necessarily have cameras pointed inwards at Fort Knox where we're storing gold as like a hard money basis, and just moving and transacting in the 21st century using hard assets, just seemed like an insurmountable gap. But then you have this thing that is provably rare, immutable. You can track every transaction and element of provenance. You solve the double spend problem that you get when you have credit using fiat on a fractional reserve banking system, etc. But also, I was like, this is addressing that second half of the picture of we're in the 21st century. It is current year. And so, like, I'm using Hulu, I'm using Pandora at this time, and it seemed to me, some months I'd use it on a loop nonstop. Sometimes I'd go months without using it at all. And there was no kind of mechanic for keeping up with this more usage-based economy versus ownership-based economy. I don't own these songs, I'm using them. I don't own this car, I'm using it. With ride sharing, I don't own this place, I'm sharing somebody else's. And that's kind of where that clicked for me, of solving those financial issues, solving those kind of form factor of the modern day issues. And then probably the largest looming concern I had was the political reasons. The US tied up in, now over 20 years of war, but then we're at about the midway point of that. And many other policies that are, systemically unjust, and that I don't want to sanction by holding and using predominantly the USD, which enables, all of that to happen. And this was, I can have this apolitical currency that's a store of value that is based on something that's as real as gold, even if it is less visible and tangible than gold in how Bitcoin functions, which we can get into. But it felt similar to when I became a vegetarian, stupidly enough, of just as soon as the idea clicked for me of I can see this and it's not a struggle to keep up with it. It's not something I have to convince myself of. It's not something I have to look at charts to see as, a return on my investment. It just was immediately obvious as an inevitable solution that, we were, I think, just under $1 at that time for the value of Bitcoin. And I was like, easily, once we get to people actually transacting with this thing, it's going to be 10K per, if this is the price where it is currently. Obviously, I've updated that number since then. But it just, as much as Thanos seemed inevitable to me, as the first of a solution of its kind towards many, many things. With vegetarianism, I'm totally open to and looking forward to in vitro and 3D printed meat. It was more of a comfy factor with that. But as soon as I was uncomfy, I stayed uncomfy. So yeah,
And
that's sort of my origin story in crypto.
interesting what you said about the beginning of your journey. You spoke about the journey where you saw the 2008 financial crisis, and then you saw people queuing up, and that side of the story. At the same time, now we are using Bitcoin as a means of as a money, right? So now, with that perspective, has your definition of money changed?
My definition of money changed then. So briefly, I would say currently the currency is it's really it seems the predominant usage, and I think this is uncontroversial of a take, is speculative. People view it as an investable asset, and maybe secondarily gray and black market transactions. because you don't have to deal with banks. And tertiarily, I'm not sure if the tertiary number has jumped above that secondary use case, which has been kind of historically where the brand has gotten stuck. But that's moved into the Wall Street bets degenerate brand, which might be worse than the drug trafficking brand. But I would say the other use case, which is growing and likely to become the biggest and the leader in the asset being really actually used as a currency and as remittances and others to follow, is emerging markets, especially those that have hyperinflating currencies, are dealing with some corruption in how the land and the market that they're tied to is governed. And that's where we're seeing, I think, the highest remittance use case of Bitcoin is in Venezuela, where I think a couple years ago we were starting to see something akin to a Weimar Republic of people bringing sacks of money to buy bread. With the Venezuelan native currency. We're seeing the same, I believe, in Nigeria and Ghana and now El Salvador. And there's a lineup, I think a betting market of the next countries to swap USD or the native currency for Bitcoin as it is, because of what it offers as something that's much less easy or possible to play with the accounting and put everybody's savings in a place where overnight it can disappear, and overnight they need to figure out a new day-to-day living situation. But my concept of money started changing when I started researching economics, when I started going down that rabbit hole of, okay, what's fiat? What does that mean? How did this come to be? When did we leave the gold standard in the US? And what has been kind of the, at least correlating data trends since then, which has been, inflation and cost of living rises that have struggled at times to keep up with, the explosion of Silicon Valley-like innovation that's helped boost us back to a cost of living to keep up with the inflation of the currency. But, you think of, a monetary unit or a currency and what is its real use. And there are many discussions you see take place online on the Twitter and TikTok verse of, why can't we just not have money? Imagine all the people, guys. And I think we're conflating baby with bathwater in problems of money, in problems of corporatist markets, in problems where the inequality is less the problem than where the floor is in that inequality, where people's Maslows aren't taken care of food, shelter, clothing at the bare minimum, and then seeing people go be space cowboys for fun, which, God bless them, it's just kind of an optics thing.
Good for that, right?
Yeah. But I ended up, so for my senior paper at art school, I ended up making it about, I was trying to term things as adversarially as possible so that I was basically not trying to sugarcoat the ideas so I could get as much pushback as possible. So I called it Capitalism and the Human Spirit. And I used terms that weren't like, cooperatism or agorism or voluntarism or a lot of these terms. I wanted to use kind of the one with the worst branding so that my panel would have, come armed and ready to tear it apart. But I kind of start with why do we transact? And kind of trying to start as close to the axiom as possible. And so in like the philosophical hypothetical of why don't we have a commons of ownership of things, and where does kind of homesteading come from, and if you're putting work into something and creating that thing based off of commonly available assets, what does that do, and how can we make more of that, where we can leverage this unique human ability to make more make more pies versus just carving up the pie we found. Now, if the pie factory is run on coal and like quasi-slavery, that's not cool, and that's not something that should take place in a system where people can voluntarily engage. And I think that completely encapsulates, well, if they're not allowed to immigrate to wherever they want, then it's no longer voluntary. And there are a lot of issues that need to be considered there. But when you're spending time building something and value what you've made, and then you see something else, and potentially something someone else made, or worked on, or does, or is, and you, it comes back to just the basics of why aren't we on a barter system, at the very least, or just commonly, kind of even logistically, taking and giving things in a gifting market of, Burning Man fame. For one, I think we can do that on a microcosm. But generally, what money is you take the ultimate non-fungible token, which is your time. That's the one thing that you really can't, liquidate and trade for other things. You can only do one thing at one time. And money is an attempt to quantify kind of the time that went into something, and the time that it saves for others, and the quality of life benefit that others see in that thing. And so we try to create as unbiased, as objective a vessel of, okay, I've done these things and I'm quantifying this time value, I'm quantifying the value I see in what you've done by this much, and you have it in this much, and if we meet in the middle, then my life can be made better by giving you something that I value less than what you're giving me, and your life can be made better because you're giving me something that you value less than what I'm giving you. And so in the ideal, platonic, unrealistic world, I think that's the purpose of money, is so that people can basically concretize their values and express them and trade in a way that both parties end up with an extra pie, versus, a carved out piece of what they came with. Now, the realities of politics of the market, of corporatist, special interest, etc., of borders being drawn that limit people from being able to communicate or move, or all of these things make that a total dream. But that's what I conceptualize as money. And everything wrong with the market is a distortion of that being as clear a communication of people expressing their values as possible, which is what fundamentally, I believe, distributed ledger technology, cryptocurrencies, to be able to address, to be able to create, in as many systems of value as there are people and more, versus a one-size-fits-all average where everyone's quite uncomfortable in the middle. But currently, very few cryptocurrencies are actually being used as money, as I'm just expressing my value, because a huge part of what's calculating that is, well, you're going to get taxed on every of these transactions, the gas to power an Ethereum transaction, the switching cost and the UX that eats into your time, into your quality of life, and therefore is kind of tacked onto the price. I think the more mature we get, the more we can get closer to what all technologists, talk about as technology being a thing that makes the world more like each of us want to see it, without creating so many interruptive experiences where it renders itself invisible like magic. We're not there. So don't expect that of crypto. It's pretty much in the opposite end of the spectrum right now.
You mentioned a few things. One thing that you mentioned about the value and the communication aspect, on how do you value someone else's time. And now in order to get to the ethical side, you also mentioned, like, how, right, so how it is created. And when we go into the crypto world, of course, it takes a lot of energy in terms of creating, let's say, mining Bitcoin as well, right? So even then, like, the energy is produced, I guess, not so ethical yet. How do you see the balance there?
Sure. In all of life, there's a cost and a benefit. It's our job to analyze. Okay. So I would say it sort of brings to mind. There was this French economist in the 18 or 17 somethings, Friedrich Bastiat, who talked about kind of the seen and the unseen. And one of the examples he uses is with kind of a window maker, a glazier. Um, and what's seen when somebody's window is broken is that the glazier is getting more business. He gets a commission to build a new window because one's been broken. But if everyone's windows are fine, then what's he to do? Well, what he's to do is all those people that paid to replace their windows now have that capital as not replacing something that was taken, but as something that can be built, like a new building full of windows that could have been a value add to the economy. But we don't see that reality because we went down this other fork where the windows broke, and so that money was allocated here. So we see this guy benefiting, but we don't see how the entire community would have benefit from being able to allocate that productively. Wait, sorry, I lost the plot on the question you were asking.
No, no.
Uh,
Well, what I wanted to
oh, right,
ask
right,
you,
the ethical point. So,
yeah,
sorry.
ethical
So,
science.
what we see is, well, we weren't mining Bitcoin before, as an example, because it seems to be the most cost heavy on energy allocation, potentially CO2 emissions, etc., of the cryptocurrencies. We didn't have that going on before Bitcoin existed, and now we do. But what we're not taking into account is what that might be displacing in terms of the production, not only the displacement of capital being allocated because the fractional reserve banking allows for investment untethered from what the market is signaling that they actually want, which is where you get these bubbles that burst because investors are trying to make something happen for their friends, or especially like federal banks and those that are kind of allocating and adding some zeros on their central ledgers in a situation. And so we have a ton of things being built that nobody wants that goes into waste. Not only that, but also the production of this quasi-paper currency and coins, etc. It's far, far worse for the environment than the computation power necessary to mine a Bitcoin, like apples to apples, even if you're not pegging it to like the value of a USD, even if you do 1-to-1. That is far more detrimental to the environment in terms of how the paper treatment happens, the chemicals that go into that, the blending with the plastics, the burning of the plastics in the blending process, like every single part of the supply chain, let alone shipping and trucking cash around. It's far worse, but because we see something new and not hypothetically what it's meant to replace, it seems like a new ill without kind of reviewing the status quo that we're standing on. Secondarily, a few years ago, I was on a panel and a similar question came up, and I will surface that due to ridiculous levels of privilege generally, and maybe some wiring in there, I am a pathological optimist. So immediately when this problem is surfaced, my go-to is like, well, that's a bounty on solving the energy problem. That's creating an immediate, tangible, globally participatory prize on creating much cleaner ways of producing energy in order to mine, because your profit margins as a miner, especially these places that are like 100,000 square feet filled with these mining rigs. Like, when your profit margin is like 80% into the cost of running those machines, that's an incredibly huge market that kind of exploded into being of how can we create machines that are as clean and self-sufficient and energy efficient as possible, because we're kind of getting along fine-ish on our day-to-day with how we experience our usage of energy. And the cost of utilities at this warehouse is relatively low comparative to kind of the overhead of this entire organization to produce some product, software, what have you. But when a company is suddenly operating on 10%, 1% margins, or an individual miner, though for Bitcoin that seems less and less worthwhile to do, that's created just, you don't have to have an X Prize, you don't have to have a grant from an EU commission on sustainability, because you will get to keep, you define up to 100% of what you're producing here, the more that you solve this energy problem. So I thought of it as sort of the idea behind blockchain technology and Bitcoin and proof of work and staking and these other protocols, and the idea behind kind of the economists that likely inspired Satoshi and those that followed, like Hayek and Mises and the like, is creating incentives so that people act in a way that benefit each other and benefit the whole in a positive sum system. And so I immediately just equated to the energy problem that's been introduced with the additional compute power going towards mining, as this is the biggest, most powerful, most direct global competition and bounty put on finding a million ways to be more energy efficient that's ever been created. Which is easy to say because everything's the biggest that's ever been created, because now there's 8 billion and there used to be 7 billion people on Earth. But that's my maybe total blinders up, pathological optimist view on the energy problem, but also kind of but bringing up the grain of salt of, listen, what we had isn't good. It's worse, in fact. So if we could replace that more and more, that would be great.
And given your background, given the beginning you had, can you perhaps say maybe you're let's say an early adopter of, let's say, any of the cryptocurrencies if you use? How do you compare your life now, given that you are in this space, prior to using the fiat currency, like all of us still now? So how do you compare yourself to that particular life, in terms of uses of currencies?
Yeah, it's sort of like the curse of choice has been introduced to an extent where I now have to agonize on some decisions about, okay, am I going to use USD and sanction this system, this unjust system to some extent, or am I going to use something that's a much harder UX and kind of cooking omelets with what would have been, if I just wait, a field of chickens one day. Even as broad as a metaphor that is, it's still not investment advice. So I feel ultimately close to exactly the same as I did when I was in college, buying my first paper wallet with cash, and knowing one day where the price would hit at a minimum in my art student gut math view at the time, which was like, we're hitting at least 5 figures, baby, because of just the value in there, which I can get into, of like part of where the value comes from, and it's not just rarity, and how I felt then is, this is going to a place, and if I spend any of this, it's kind of a cost benefit of, I want to hold as much as possible in cryptocurrency, and not in a governmentally tied political, financial instrument like the USD. But when it comes to spending, I've kind of treated my day-to-day kind of I think there are a lot of like savings and investment advisors or just bloggers that say you put 30% away and you spend this on your rent and your dailies. That's sort of how I still view it, as this is my per diem in USD, and as much of the rest as possible stays in distributed in every sense ice boxes, because of where this is going and the impact I want to be able to have later, in lieu of tempting expenditures in the short term. So it comes down to largely convenience and a level of patience I would not have if I didn't make accessing a lot of what I keep in alternative currencies almost completely inaccessible to myself in an immediate sense. I don't know if that kind of addresses that question of like philosophically where I'm spending and then logistically where I'm spending and kind of what that time horizon looks like. And I think I get more towards wanting to unthaw and deploy a lot of those early holdings sooner and sooner. It feels like at the same time it's been like talking about this hypothetical thing forever, and then all of the sudden a lot of it is sort of everywhere, but it's still in that to put it as unkindly as possible kind of gimmick novelty at best, speculative instrument place in the US market especially, but we're getting rapidly closer to where the volatility will start to die down as the price matches actual adoption at both the enterprise and consumer level.
And as far as the adoption is concerned, again, a lot of countries are, going towards that route, like you mentioned about the South American countries before. Now, given the adoption rate at which we are at, do you think any of this existing cryptocurrency would be considered as a stable coin in future? I mean, from your perspective, it's just a perspective, right?
So, yes and no. Broadly, I'm seeing a model where I had a lot of naivety going, even just like 3-4 years ago, about the stability in store for especially a lot of alternative currencies, even Bitcoin itself, in the nearer term, and the excitement and industry that's building around arbitrage, yield farming, which in my opinion is not of interest to me. I think just playing hot potato. It's
I was waiting for what you're going to say there.
I'm hugely not a fan. It seems premised on, if you were to dichotomize the world, on Keynesian economic theory over Hayekian, which is much more playing with animal spirits and leveraging I don't want to say anybody's name in particular, but say an influencer hype that may be misused to get people to rev up their animal spirits, buy into something. Hey, if we all keep buying this, then the price will go up. There's no value in that. There's nothing underlying that. That it's also a distortion of like actual what's desired to be built in the market. That's dev talent going into a pit. But I also, just because something doesn't seem to have inherent or objective value, that's still producing quality signal in terms of people are expressing they want something. People are expressing, like, that's always what price and price changes do. Even if you don't like the vaporware it's built on top of. I lost the question. Sorry.
Yeah. I'm trying to get you back into that. It's about, you've seen different currencies now and different adoptions
Oh,
now.
stable. Yeah. The
Yeah, and then,
stability.
yeah, stable currency. Yeah,
I
basically.
got lost in the volatility, like we all do.
It happens. It's okay.
That's the issue we're seeing. So, uh, I could show you, but there's like there was one day, I think it was when it first hit 14K Bitcoin, and I was just like, okay, guys, this is awesome, but there's nothing in terms of like consumer or enterprise adoption that is, or even like financial institutional adoption that should be reflecting this price, or like even a 5x on this price present day. So I think we're getting more towards volatility, more towards a place where when the value of a thing is recognized by adoption and use and trade volume, etc., and its price gets so far away, the delta gets so high that it's just incredible volatility becomes inevitable. And so I like whiteboarded quickly. I think I just like checked. I got a notification from like one of my wallets that was like, "This is the price now." And I was like, "Okay, calm down." And so I whiteboarded this thing of this was like December 2017. Of okay, here's the current price of these. Here's where it started. Here's where the prices were. Here's what existed. And then here, altcoins came like a couple of years ago, and starting with Ethereum, and this is where the price is now, and this is where adoption is, right? And so it's going, like, adoption is going to get here, but in the run up between this kind of actual value measured by adoption and the price where it currently is, we're going to have a ton of volatility as it slams up and down against the floor of what's actually in use, what's actually out there and not hypothetical and not speculative. And on that chart I said, like, maybe 2020 like down, like post 2020 we'll start to see this price actually be reflective of reality. And I noted on there that part of that is because of the crazy price now that's kind of acting as a signal flare into other industries and not like niche cyberpunk Wall Street degenerate, etc. adopters that were involved at the time, of just like, okay, the grown-ups are going to see this signal. And I say that purposely pejoratively because I was in the, politically radical, techno, adopting, etc., buzzword camp. So it's like, we need adults. Can we have some industry players take a look at this technology and adopt it? Because that's really where a lot of the, big tectonic movement's going to happen. And that price was just impossible to look away from. It's an offer the legacy industries can't refuse. And that's where we started to see a lot of the banks starting to, see the writing on the wall and start to retool and build out new arms. We started to see a huge, just a non-existent to a huge surge in adoption of the enterprise solutions being built, like Lucidity for digital marketing and Hedera Hashgraph for infrastructural solutions, and a lot of these things that have kind of been under the radar. And we are getting closer to, long story short, towards that actual value and that volatility of the arbitration between the speculative price and what's actually being used and what's not just waiting in the wings in a hot wallet to be traded within months. We're getting much closer than ever before to that, which over the course of a decade may not be that exciting of a thing to say, but I would say not investment advice. Within 24 months, I think we're going to see ceteris paribus in terms of like some quantum resistant ledger and quantum computing coming out at the same time to ward out of how uncrackable these keys can get. But of the existing solutions, I could see the price of Bitcoin starting to settle over the next few years. and hitting some large industry plateaus as different large adopters come into the space. I don't want to say specific numbers here, but I think today that there's not much that you would want to transact on the daily unless logistically, politically, the costs outweigh the benefits currently of you might be spending something that's at, a tenth of its value in 24 months from now, for example. Like so long as you're taking that into account, then go for it. And to that point, I think a lot of that volatility and the recognition that we're not going to see stability, but it's probably going to be a larger and higher price market than we see today. We've been seeing that since 2018. A lot of platforms start to offer significantly discounted prices if you pay in one of these alternatives to USD, specifically like Bitcoin, Ethereum, in recognition of where that's going. And if you need something today, then whether it's a payday loan or spending something that is at a fraction of its near-term future value, that's something people are doing. But the predominance of the remittance use case, which is where, like, once we see that in the US, that's where I think that stability and that stable coin effect, without designing for stability by designing complex burning and generation, burning and mining, protocols. In the US, when we see that, I think that's going to be an indicator similar to how the USD kind of currently acts as when it's okay to come out from the volatility bomb shelters. But right now, that's mostly taking place in emerging markets where transacting in USD or local currencies is, hard to believe it or not, like more of a volatile prospect than spending Bitcoin. So, long story short, depends on your context. That's the whole point of pricing and value is if it's worth it to you, then that's where it is. But in terms of markets not looking like an EKG of someone experiencing a heart attack, I would say that's going to be led by probably enterprise adoption over the next 18 to 24 months.
And there's so many, cryptocurrencies now, right? So there's so much to look at, the tens of thousands of, I guess, I'm just throwing out a number, probably more, I don't know. And, in terms of investors, right, who are not, like, let's say, familiar with this territory, and then they've only heard about Bitcoin and maybe largely Ethereum, to some extent. I know, I mean, there's no advice, good or bad advice at this stage, but if you were to sort of, speculate the rest of the cryptocurrencies, where do you think they would be in the next 5 years or so? Like, will we see more cryptocurrencies coming up, or some of these will die?
Both. I would say, in short, both. Some will die in all but name. I think barbecue coin and Coinye still technically exist. That's what an immutable ledger does. It's out there. But the price will be as close to zero as you can get in a three-dimensional reality. And we are going to see more definitively new cryptocurrencies and protocols being created for sure. The beaten to death analogy is, look at the internet in the 90s and look at it today. I think it's an apt parallel in a lot of ways. But things are, timescales and volatility is ramped up because we have the internet as a tool to deploy and many instances mislead people, and market corrections swing in and waste comes out, and we might see the legendary lots of dusty abandoned Lamborghinis in across Miami and Venice Beach and other bastions of crypto degeneracy. But I did lose.
Yeah. Compared to all the
I had like half
cryptocurrencies.
a coffee.
Yeah.
Yeah. So, yeah. That being said, I mentioned briefly before quantum resistant ledger as an example of kind of a new type of technology in the distributed ledger tech space that comes up. That's not just I would say there's, compared to the amount of tokens that exist, very few like separate cryptocurrencies, but there are still plenty. But one of the biggest, largest looming threats for all of them is quantum computing, because the reason that private keys are effectively unbreakable now is that there's no machine that could go through every sequence of the alphanumeric and seed phrase passcodes to access wallets currently that could do so, within a lifetime or within several lifetimes. But if you deploy quantum computing, which can calculate all possible routes of variations almost simultaneously, then you have the hypothetical ability to crack private keys, which is kind of the underpinning for the crypto part of cryptocurrency that keeps it safe, keeps it in your control. But then, to meet that threat, the quantum resistant ledger is in development. Other ways of thinking about how these things are stored in a hybrid of mnemonics and external keys, but even if the keys aren't external, every variation can be run through. So about different kind of fundamental ways of keeping ledgers distributed. Apart from that kind of nuclear side of things, I think we're going to see kind of the same as you wouldn't compare, a browser to an app push notification technology. These separate cryptocurrencies that offer unique protocols to solve similar problems, or unique protocols to solve completely separate problems. These are starting to come into their own more and more, and not just kind of how the finances are allocated, or wallet technology, which is great and exciting and immediately useful. But when you look at, I mentioned briefly before, like Hedera Hashgraph, which instead of having a synchronized every node in the world has a copy of the same ledger everywhere, and all of them are competing on computing power to verify and validate transactions and information together. That is a use case that's excellent for a common currency or store of value, or for accounting purposes, where that kind of universal transparency is more necessary. What Hedera uses is a lottery protocol that randomly selects nodes so that no prearranged hey, I'll validate this for you and I'll pretend that that's true, because nobody knows who in the world is going to get assigned to validate that data. So you get to do a light years more energy efficient way of validating information, but you wouldn't necessarily want to use that for a national currency, because not everyone gets to see what's going on there, or for accounting. But it would be great for supporting microtransactions without getting bogged down by the cost of the transaction itself, rendering it useless, or for generating, gaming logic in a way that's more immutable, and help to eliminate fraud in the space where, say, a gaming algorithm, whether it's casino or recreational gaming, or a gamified way of remunerating equity like Quidly is doing, you can have that allocated very quickly in real time, measuring all data, instead of only expending that massive global energy that's necessary in proof of work for specific protocols. So for one, you want to see something that's actually doing something, that's actually unique, that has real world value, that's intelligible. And then I was actually, I was working on sort of something that started as a rant and then developed into a bit of a blog post about sort of red flags to look out for, and exactly that, of how do you assess what you're looking for, and then try to keep red flags in mind as much as possible. So do these things actually do these separate projects that investors and people coming into the space or transitioning into the space or curious about the space, does the project, can you understand what they're doing? Have they said what they're doing? Or is it like Doge, but a paperclip? Or like, if that's the case, then, caveat emptor, God bless you as you enter the casino. But, are they actually building something that you can understand, and are you seeing that they're applying it to something, even hypothetically? Do they have a white paper at all? I'm seeing a lot of platforms launch. There's no white paper that explains the tokenomics. And then past that point, I'm seeing a lot of people take advantage of the fact that people are assessing these projects at a glance. And when you click through to the white paper, it's sort of like, we have a team. We plan to build an equitable community. And you click on the tokenomics section. We will have tokenomics. It will totally all happen. And it's just like, this is filler. And so there are, a few checklists that people can look through on, does this thing qualify as valid for your attention at all, apart from leveraging hype today, and playing, games with market movements. But is this thing going to last once the dust settles? Are they actually building something? Is it real? Is it intelligible? Do they have an explanation of how it actually works somewhere? Because the reason this technology is trustless is because how it works, the mechanics, are transparent and available to everyone. And if it's not, and if that's labeled as secret sauce, then I don't think that qualifies as trustless technology, or like properly distributed ledger technology. Is the team anonymous? Which is more and more common, that people are raising millions from masses with anonymous avatar founders, which can be great for solving for political restrictions and keeping people safe or able to transact globally. But it's also a risk factor to look at in terms of, okay, once you've validated this thing makes sense to me, it has applications, they even have people using it or companies using it. Are they going to stick around, or do they have a nice idea that they don't plan to execute on, and there's no one to hold responsible because no one knows who's behind it? There's kind of a slew of those checklists to go through that I'd love to see much more public education go into, with because the entire space is marred by the bad apples that launch these scam and rug pull and Ponzi scheme projects, because they're using the same buzzwords that go along with explaining distributed ledgers and blockchain and tokenization and stuff. And even, you'd say mature investors like Mark Cuban gets taken down by a rug pull because there was so much technical language that it's easy to, I don't want to assume what happened there. But, within a few minutes of looking at their technical papers, it's just, they're saying it's soft pegged and multi-collateral and soft and quasi, and it's just, it might as well be fiat, but less dependable than USD, because at least there's like a court system and a company that had to register, like at least there's some accountability and transparency tied to that. But it's easy to go wall-eyed with these things, but there are kind of guidelines to look for with, does this make sense to me? Is it unique? Is it solving a problem? Do I like, what they're doing? And then, are they actually going to do it? There are things that can help separate the noise from the signal of those projects. I think will likely stand the test of time, over the next at least 5 years. And the only reason they wouldn't stand the test of time beyond that is because something even better, more efficient, comes in to do what they do better. Yeah.
Yeah, interesting take on that. And that reminds me of a time like we used to do, the review of all the bookmakers, right? So all the bookmakers here in this part of the region, like, we used to do a platform where we used to review the bookmakers by, okay, whether or not they will they'll give you back your money when you win, and those kind of things, like how easy it is to take the payout and so
Oh, for
forth.
betting?
It's on the betting, yeah,
Okay, okay.
basically betting, yeah.
Bookies, yeah.
Yeah, all the bookies, right? So now I'm kind of thinking, why don't we have a platform which actually does that, right? All the parameters that you mentioned, like, about the white papers and all the different keywords that you use. Why don't we have a platform which actually does that, right? So that would be an instant hit,
That's exactly. So that's what I was trying to look for, is understanding kind of like the point of the technology,
Yeah.
um, because you can now solve problems that you used to have to relegate to trust, and that's where like this idea comes from. And when I was studying business, I was at a college in Rome, Italy, and so as part of being in that environment, it was studying kind of global business dynamics and entrepreneurship. And one of the things that were really interesting that came to mind, with regards to like cultural norms and business norms, that podcasts like Econ Talk also are really good into going into, are they highlighted that, kind of the culture of doing business in Italy as an example, where maybe this is broad stroke and this is a few years ago now, but it was kind of brought up as it's rude to bring up the actual business you're meeting for, like within the first 6 months of getting to know someone, that you're only talking because you plant the ideas to go into business on some project. But it's considered rude to not get into that, like, or to get into that, like, anywhere near the first few times you meet this person, get to know them. Our professor was saying that he was at the house of someone who was, they were meeting to potentially go into business together. He was at their house having brunch, like they'd met so many times. He brought it up and it like soured the whole day because he brought it up after like their sixth meeting or so. Whereas in the US, it's like, all right, get down to business is like kind of the meme of the culture of, what do you want? What is this for? Where are you? Okay, like, let's go into it. And I think part of that is a reflection of even how awful and bogged down and distorted our court system is. Let's just talk about like civil system of for handling contract disputes in business, compared to Italy that was used as the example, and a lot of global court systems. You can't necessarily depend on a speedy, fair enough arbitration, in broad strokes, where, hey, yeah, let's sign a contract and I met you yesterday, let's do, a contractor's agreement, get to work later this afternoon, because if anything goes wrong, I can say, submit this form, your lawyer will hit me back with this. We all know the cost of, it's going to be worth less for you to bill your lawyer's hours than to actually pay me what you owe me. Like, we can rely on that, so we just fly in the business, from like meeting people at Burning Man or whatever, and that's even on top of like how terrible and how much improved our court system could be. In Italy, they were like, that's completely impossible. You're not going to be able to efficiently, within a decade, like see, like especially like small claims or even large claims through the court process efficiently. So you need to get to know and to trust this person that you're transacting with, and to like assess them for yourself about how likely they are to stick to their word and to deliver and to not make off with your stuff. And so when kind of Bitcoin and blockchain technology and trustless technology was being, when I was hearing it for the first time, I was just going back to that example of Bastiat. This is the scene space we're seeing. We're seeing the printing of fiat, of cash, and that's just like accepted in the air we breathe. But what we're not seeing is all of the global collaboration, all of the market building, innovation, etc., everything that can get built when you no longer have to worry about, are you actually going to render this payment once I do this thing, because we have smart contracts. If you upload this thing, it immediately executes that the money is there, and you're not going to do that unless you can see the wallet and see that it's there on an immutable ledger that anybody else in the world could bring up, and it's not a mail fraud, wire fraud, Firefest, doctored, bank statement that you can get when you don't have this globally accessible ledger. Like, I can't just pull open Chase's accounts and go and find your wallet and see, is that really there? But on blockchain technology, when you have a trustless, distributed ledger to disinterested parties that can say, key in this number, do you see that same thing? Okay, it's really there. Okay, execute smart contract. This will automatically trigger to this wallet, pull this amount. Once this file is loaded in here, boom. And that's just like a very simplistic example of that. But what we're not seeing is, that meme of society if, the Flintstones was still on the air, whatever the meme is, and it's like this futuristic rendering of like a perfect utopia. Is what we're not seeing is, Peter Thiel's confused about why we have 180 characters now, 240 or so, or however many, 140, and now it's 280, versus flying cars. Like, we should have flying cars. It's on you, dumb innovators. You want to play with your toys. It's because we're like the bottleneck of our court system, of going through the few institutions that we can trust, and going through manual labor of validating that people have things, their track record, all of these things bogging down what could be productive capital instead of just repairing a window or adding one extra. It's not just, it exceeds trillions of value that is starting to thaw out, of business that wasn't possible to take place logistically before that now is possible. And so what we're going through right now is kind of, there's a lot of novelty and noise as people get excited about it, while enterprise adopters and DAOs and DACs start to exist for the first time. We're really at kind of the beginning of the hockey stick in adoption, innovation, global collaboration, borderless collaboration, as what we can see there. And that's what any technology, especially distributed ledger technologies that seem best suited for it, that can create trustless platforms, enables all of that. And that's why, at least in part.
Mm-hmm.
And that's also where the value comes from, of the price of Bitcoin. You're having, instead of a bank and their legal team or their notaries and everybody involved in the manual process of validating the trust of something, you're having disinterested parties solve, not even, with zero knowledge proof of, they don't even have to know what transaction is taking place. By solving a math problem, they can do all of that validation work almost automatically. And all of that value that was locked up in this slow, human error, centralized stack in the legacy market is now distributed. And I think that's kind of the basis where the price of Bitcoin is tied to a reflection of that value being unlocked, which is why adoption matters in my view. Similar to how the US dollar used to be tied to gold, which is immutable but has limited value adds, apart from electrical conductivity.
Now, I want to bring you back into the different cryptocurrency. One of them, obviously, is Ethereum. From your point of view, given the popularity it has now, given the institution, I would think so. It has. What do you think about its future in terms of adoptions? And do you think it would be one of those currency that would be a mainstream, let's say, even better than Bitcoin in terms of adoptions, or, I don't know, like, how do you see the future?
I would say, okay, I'm a generalist, so I'm going to use these analogies badly, but I'm going to use them. I'm just on that sweet spot in the Dunning-Kruger of just like
Yeah.
total mental confidence to use stuff willy-nilly I don't know about. But if we want to call kind of Bitcoin HTML and then Ethereum as Java, of
Mhm.
just there are new languages being developed in software that are great at doing a slew of things and new things like Go and those that speak to machine learning and neuromorphic capabilities, um, and but Java's still around and it's still a workhorse and it does a ton, um, and I think similar to you know dichotomies in code of, well, we don't use any ETH because we're completely on Hedera for this lottery reason because we're building um, gaming applications and we like that gaming mentality of building even when building non-gaming applications, whatever. Um, I think ETH, ceteris paribus, which, all things staying the same, will continue the same way that, Java hasn't been displaced and is still useful as, a logic upon which to build these distributed applications. It was also a big part of that. It was a first mover. They kind of created the DApp space from the hypothetical and made it material. Now, as part of the roadmap from inception was to go towards the proof of stake protocol so that you can get around this problem where there's a centralization of ownership of mining rigs in a proof of work system because of the costs involved. Proof of stake allows people to be small early adopters and incentivize them to hold versus trading rapidly, which is going to be a huge kind of force in driving more general stability outside the stablecoin designed around earning and mining depending on trade activity. I think Ethereum, once it comes out with proof of stake, is going to be much more in its realized form of why people are buying it now and why people are building on the language now. There will be all of the things that Solana and Stellar and other like very protocols that lend themselves to development of distributed applications for different specialized purposes or new ways of achieving efficient trustlessness without going back to doing a delegated proof of stake, like EOS, which basically just takes us back a few steps or many steps towards centralization. Kind of renders it a little bit moot. I think ETH is going to stand the test of time, all things staying the same for those reasons. And big ups to Vitalik and team.
No, because when I look at different cryptocurrencies, I also look into the forums and I also look at the members, like you mentioned, like who are there, who are public, and for me, Bitcoin is still elusive. Even though it's very popular, but then when you look at the usability in future and how general public is going to use that and how usable it's going to be for general people, that's where I thought like it would be a good question to ask you about the future of it. So yeah. um Now I would like to take you a little bit into what you said before, beginning of your journey in the crypto space, about the 2008 crisis. Why I want to take you back a little bit is I would like you to sort of, wake up in the morning and then think about a world that is more idealistic, from your more hypothetical, right? You mentioned hypothetical a few times, so I would like to imagine the world being, let's say, fully decentralized economy. It's a
No,
hypothetical question again. It's a
no. That's where all of my interest kind of stems, is kind of where are we now? What would I like to see? And does this help get us there? And without like megalomaniacal designs on this is how the world should be, but the beauty of distributed systems and decentralization is was something I recognized because that's kind of where I was starting to develop politically and artistically. And then when I got into entrepreneurship and investment and the tech world, what you want to see, and it comes down to this phrase. I think of East Asian origin, let 1,000 flowers bloom, which is one size doesn't fit all in any scenario, in any sense, in any way. And, there are currencies that act in a more, Keynesian manner. Like, I like Holochain for their community building and attention to, keeping communities to Dunbar number scales and then just scaling new communities built on top of that. And there are completely different dynamics when you have a close-knit community transacting in a market of products, services, ideas, etc. Than if you have a mass market. And so there will be different technologies and different modes of engaging that 1,000 flowers can bloom to meet those fluid needs and interests and developments. So broadly speaking, and then I'll get specific, I I'd, I think, and what I've hoped for, and tried to work on projects that reflect or invest into projects that reflect a move towards that kind of fluidity of thinking more of nationality as just your ecological environment, and upkeep of what you're using around you. But for all of the services that we use, from private companies to the public sector, I think that we are moving towards modes that are much more not only opt in and subscribe to one or another, but much more that usage basis, user experience, where we can handle kind of arbitration about specific technologies or business conflations or community concerns that are not as rigid as we have them. So in short, I would say a borderlessness, speaking more to that kind of possibly cringy futuristic or futurist view of things. I think my interest in these technologies and these modes would support a reflection of I wake up and I prefer the city. So let's use the city as an example. But, we've been hearing, TED Talks and the like about, we could have hydroponic and aeroponic farming in skyscrapers, and like this is technically feasible, and we're trying it in the UAE and the Netherlands, and a couple of these like innovative outposts, and we can have pipes dug underground that deliver things without the need of a delivery person putting themselves at a significantly raised risk profile of getting hit by a car on the way to bring something to you, or even the energy cost of delivering things to you, of creating these kind of hyper-local smart systems that are informed by the node, which is made economically possible because people are contributing to informing those nodes by sharing their data to like show checkpoints and to validate that things have gotten past a certain point, and leveraging IoT technology to do so, and ensuring that all of that data is kept safe by leveraging hardware like neuromorphic chip development and federated learning protocols, so that you can effectively share what's important in the information without any other system being able to see that actual information of this person was at this place at this time and therefore validated it. We can have zero knowledge proof systems that are able to perform machine learning at the local level, and essentially get more towards what I was describing, and what, is, the common tech meme of rendering the technology itself more and more invisible, so that you have something that looks like people have a UBI and are able to get to use what they need when they need it, and to build and collaborate and trade in a more borderless fashion, and not have to worry about if their data or property or business interests are safe, because more of this is kept in distributed and trustless mechanisms. So just going about your life without having to worry about anything but what you'd like to do or like to learn about, in a way, without political or clunky UX restrictions, keeping any of that behind. So we can have flying cars, Peter. Um, I want flying cars on Mars, indefinite life extension. Um, I want, efficient travel, and, you know, an elimination of political borders, allowing people to immigrate. I think that's, if there's any fundamental human right, I think that has to be the one, or at least the top one. And I think kind of the mechanism of distributing that control, that power, that information, and maintaining privacy using these new technologies that wouldn't allowed for any of this before. People that came before us were further away from what we would, idealize as a fair society. And that's terrible. But when anything comes along that helps bring us closer to that, it's very exciting and very upsetting when people trying to take advantage in the short term jeopardize that or delay that, delay what could be hundreds of years of human development and collaboration by setting things back 10 years where they couldn't do that on a global scale, which is part of why I really don't like these scams running around. They just give it all a bad name. So I don't know if that's clear enough. Otherwise,
That was not too
yeah,
vague.
I also want like a real hoverboard. I don't want like the Segway without the stick hoverboard. I want a skateboard that's not touching the ground. Okay,
Ah,
that's
that's
where I
an
want to be.
interesting one. That's an interesting wish, actually. I think there are certain flying shoes that you can wear now. I think it's more or
They just
less.
blast air. I don't want to go
Yeah.
off, doing
Okay. It should be seamless, right? It should be seamless, and you
my
should just fly.
my interest in distributed systems and open borders um, stem from the same selfish desires. I want indefinite life extension, hoverboard, real hoverboard, on like able to go to Mars, able to go to TRAPPIST-9, and all the other Earth-like planets we're finding out there, to be able to do and make anything, and that becomes way more likely to happen within your lifetime when everybody in the world has the luxury to participate in that kind of collaboration, where they're above subsistence, where they have access to a global community of people and capital and technology and information. And so these things help to do that so that I can have my cool stuff in the future because someone else is allowed to invent it now. We didn't have that kind of privilege in the small community that does have access to the capability to do those things, bring them to market, and so on. So selfish, but like a noble selfish.
Yeah, I mean, I could relate to that. Some of the wish that you have, it's like flying whenever you want. That's an interesting one. Um,
I might not
and
do it, but I want to be able to.
yeah. And that would be interesting. Yeah, that would be interesting. You mentioned about various projects. You use this phrase all the time during this conversation, most of the time at least. What are some of the projects that are keeping you awake in the night that you're working on, or that gives you smile in the morning?
Well, there are a few. that I've been expecting to exist over the last, since Ethereum led the way in proving out kind of this is what dApps can look like, or the architecture that dApps can be built on, that I haven't seen yet in mass adoption. Things like solving the trust problem on crowdfunding, working around the negative externalities in intellectual property, which some players are getting into now. I just want it to be sooner. But yeah, there are a few in the short term that exist and have existed that we can look at today that I find tremendously exciting. One of those is Snips Dot Ai, which was acquired by Sonos about 2 years ago now, I think. And what they did was basically built a smarter, better Alexa that also is incapable of sharing your data. Your data stays on the device. It doesn't even, keep anything in a honeypot of storage that could be like physically hacked or acquired. So it accomplishes, that smart assistant, tailored experience, tech in both the hardware as well as the software, leveraging, literally they were developing neuromorphic chips. They had a team of global, and by team I mean independent people contributing in exchange for token, contributing machine learning models to be able to perform this distributed learning that means that no company gets to hold all your data. And the fact that they were acquired by Sonos means that it's actually going to be accessible in the market, unless I don't think Sonos, they haven't indicated that they would kill that for any reason. And so that is out and live, and I am very excited. I wait with bated breath to see a purchasable version of that come out. I'm also very interested in some of the development taking place on the Hedera, Hashgraph protocol, like Drop. That's Drop with 2 P's. Now, they're very nascent, but comparative to like Snips, which is post-acquisition. But what they're purporting to do is build sort of what something I spoke to earlier about that microtransactional use-based payment interface that, say, I sign up on a Drop account. I have my name, all my KYC, my banking, my ID information, my payment methods. I put it in there, and then I never have to set that up on any platform ever again because I've set it in this thing. And they don't have access to that raw data, and through zero knowledge proof or other ways of proving who a person is and that whatever you're using has the right to pull money from your payment methods, you're able to seamlessly go into Netflix, go into PitchBook, go into possibly even, rental agreements, depending on, the adopters that start to enter Drop's universe, no longer need to re-enter all of that information from a UX perspective. That information can be encrypted and inaccessible in these honeypots that keep getting hacked. Say, oh, Netflix got hacked, Twitter got hacked, etc. got hacked, because all of them are keeping like this stack of everybody's names and emails, and even if they encrypt it on their side, they're still storing all of that and a key to be able to decrypt it, and that's rendered moot. And those companies, as a platform for facilitating advertisements, still get to monetize it without taking on the risk of actually storing it as a honeypot and a liability that they have to pay damages if they're ever hacked. So I think Drop is something that can address all of those things and create that. And then for the startup, for the entrepreneur, to use Drop means you don't see that like 70% fall off that happens when people visit your site and then they don't feel like filling out a form and then they're gone. Now they can come in, use stuff, you get to benefit from that data without storing it, etc. So that seems like a real win-win-win technology coming out. There's a new project by someone I met through Clubhouse, actually, called Royal, which is something that we've been talking about for a decade that blockchain technology would allow for, which is, oh, I could own my IP and then license usage of it, and people could buy into it, and something like Otis is another platform that does something similar in the fine art space, where, say I have a JPEG NFT, but you don't necessarily have $40,000 burning a hole in your pocket. You can now buy pieces of licensable artwork from the artist and have ownership that you can see, dividends and remuneration from, commensurate with, how much of it was available to buy and how much of that piece you own, so that artists can more easily go independent, more easily see grassroots success, and their early fans don't have to get all jealous and over it when their early adopted artists get popular, because they're actually seeing the upside of that. So Royal by Blau, spelled 3LAU. They just launched like last week, I think. So that's kind of across the gamut of a few consumer enterprise media projects that are exciting right now. And yeah, I tend to rant about the others across Twitter and other platforms as they come out. I'm really excited about Loopring's entrance to the US. They're a great wallet that is solves a lot of the problems that people have keeping their holdings on these exchanges, which are accessible by their email, so therefore effectively very easy to hack and get at. But then those super secure wallets, like paper wallets and these metal wallets where you're leveraging these mnemonic devices, are very user unfriendly. So I'm excited about the adoption of and use of crypto and NFTs that Loopring's wallet and kind of new versions allows for. So that's a few that come to mind.
I wanted to ask you a question before, and then I think I switched the topic for no good reason, I guess. You were explaining about your idealistic, morning, and I'm just thinking about, I want to drag you into this world, and I'm thinking like, okay, so what do you think about tax? How does tax work in this idealistic world? I wanted to just pull you into this world again, so.
Yeah. I think there's a similar thing with a lot of these fundamental concepts, like as Henry Ford, awful human, but effective innovator, said, if I asked people what they wanted, they would have said a faster horse. And I think that's similar to the issue of tax, in that what you're trying to solve is that there's a social safety net, that infrastructure can be upkept, that people have access to their Maslow's, to to healthcare, to shelter, to food, at least at subsistence level, but not so close to subsistence that it's a pressing, constant concern. You want a society that's taking care of those things, and that's what tax as the instrument is meaning to do, or the same way that a horse is the means of getting you from A to B. I think that tax in the context of one central government, which has a basket of policies, which few people agree with the majority of those policies, to take that amount of money that you might be happy to allocate towards those ends. First of all, I pay my taxes. Okay, and now I'll continue. But corruption, corporatism, cronyism, all the terrible C words in the world are just rampant, to the point of almost defining public sector stewardship over those funds. That in the US we have this problem of a far majority of the money goes to military and militarizing the police. And when you give the police tanks and Boston Dynamics robot canine units, which they're actually doing, and assault rifles, and they use it. If you give them hammers, they're going to nail people, whether it's helpful or justified or not. And in my view, it's never justified. There's a great book by Dan D'Amico called The Imprisoner's Dilemma, which talks about restorative as an alternative to punitive justice, as an example of that. And so the problem with tax is that the incentives that exist in kind of this public choice, in the economic sense, not colloquial sense of public choice is good, just those words, but in this system is you get special interests influencing policy, creating bloated and distorted, monopolistic winners and losers at best, and at worst you get a systemically unjust justice system and a minority of tax dollars going towards building the roads, upkeeping infrastructure, educating effectively, providing healthcare, all of these things that we would want that to be allocated towards. So I'm very excited and optimistic about distributed autonomous organizations and what seems to be either I'm becoming more aware of these communities that have existed, or there are much more of these than existed before. But mutual aid community programs and DAOs, as I mentioned, and DACs as an alternative to even co-ops as a somewhat limited way of communities being able to allocate and steer kind of their own fate and their own participate in stewarding that community versus doing what's more like the delegated proof of stake, and you hire a representative who says they're going to do stuff but they don't have to, and being in that position doesn't mean you're good at the stuff like making a more restorative and cost-efficient justice system and eliminating corruption and taking care of infrastructure and the people. It means you're good at politicking, which sometimes there's an overlap where someone might be good at that and less good at politicking. I think Gary Johnson was an example of someone who's good at, like, when he was governor of Arizona, they got costs down, employment up, education, like test scores in schools went up, like all these things. But then it was just cringe fest of him trying to be a politician on the road, and he had some weird takes as well, and some like global ignorance, famously. But I think when you have something like, when you bring trustless into a trustless technology that can ensure that the intent of that money goes towards its ends and that the local community can steer that, as I encourage anyone to look into the split between the economists Jeffrey Sachs and Bill Easterly. And Jeffrey Sachs is of the mind, I think I mentioned at the top, of building these millennium villages of, oh, Ghana's struggling on these couple issues. I'm going to build a city overnight that does things in this way that I've written up from my think tank in DC. And the intent is there. But everything that would normally guide proper execution is missing. Like being on the ground and being able to have fast, not just being on the ground when you land and kind of set it up, but knowing what the cultural systems are and knowing, what the problem, what the crux of the problem and not just the symptom of the problem is. Whereas Bill Easterly is much more, everywhere we see it presidentially and in the economic logic, is when you give people locally the ability to kind of steer how these things are governed and stewarded, you get better outcomes. And it's just ethically also, it seems like a better way to handle these things. So I think tax is a horse and a DAO is a car. And so I think the problem that tax is looking to solve can be done much, much better. Yeah, in short.
That's an interesting take on how you see tax in this idealistic world. Now, based on what we've discussed so far, I can clearly see that you are so much deep into this let's say the crypto world. When you want to reset this and say, hey, all this thing never existed, what kind of profession would you choose, right? I'm just now bringing you back into this world and trying to reset you, and imagine that all of this thing didn't existed. What kind of profession would you choose, like, given everything what you've said?
Well, I went to undergrad school for fine art, and I was doing well enough, but I kind of, in freshman year, as soon as freshman year, kind of came into this crisis of like, what's the point? What good am I doing? Of like, yeah, I can make something look like something and make it look cool. And I've now come back to being able to appreciate art again, to a significant extent. Um, but and I might want to tinker with that a bit more. I'm about passionate in the way that like famously ruins the thing itself about comedy. Um, you're not supposed to think about it or intellectualize it or go long-winded and technical about it, but I love comedy at the base level, for every intellectual reason in the world, where like I'll constantly have like comedy content on in the background while I work, because usually every kind of statement or thing being offered in a comedic um, context is it's ideally at least one layer abstracted. So there's that interesting thing of like, this is an analogy for this wider trend. And then, um, you're ridiculing something. It's ridiculous. You're rendering something, you're viewing reality and picking something out and saying, this is ridiculous and this is why. And a lot of that stems from just the incredible nature of, a shared society where we get more emergent order than designed. And it's just like, hey, did you ever? And then, something, in observational comedy, and something at the baseline is being pointed out that seems universal, but nobody talked about, nobody arranged for, and just saying, like, how is this the outcome that evolved from the confluence of all of this activity, this product, this event, this phenomena, this feeling? So I love it, but I think I love it in a way that ruins it sometimes, maybe. So I couldn't actually work in the space. But I have siblings that work in comedy, actually.
Ah,
Um, but, for that same reason that I love comedy is why when I heard Paul Graham talking on Econ Talk, um, when I was in school, it just kind of clicked for me of all the things I love about comedy and some of the potential of art you can do in such a practical, like safe and cozy, practical feeling way, in tech and in entrepreneurship, where in art you view kind of reality, and you select things to express a specific perspective on reality. Even if it's untitled and it's found art, the fact that you picked up this thing and put it in a white room for consideration is, you're saying something by selecting that piece out or including other things in. In entrepreneurship, you're viewing reality and you're saying, this can be made better, this can be fixed, and you're pulling all of these ephemeral, electronic, contractual community, hardware, whatever is involved together to create something new, and then putting it into society to interact without putting it, you put it in a white room as much as you pitch it and you explain it, but it's not for conceptual consideration, it's for how it interacts with the world. And that's where kind of all roads kind of lead toward that, being like ending up in a space that looks like that. And then further, once that kind of clicked for me, it seemed to me that's an incredible thing that an entrepreneur can do, and to try. And even if in every sense they fail, like even like Firefest failed, there's fraud involved, like everything's bad, you're still bringing information to the market that we didn't have, causing damage. But all of that effort creates something. And the more honest you can do that, the better and more long-standing that can be. Now, I don't love, in fact, I hate that kind of corporatist policy making and lobbying can render it so that maybe those that have been able to stand the test of time is not entirely due to merit, to put it lightly. And maybe they bloat to a size that kind of kills competition, which creates bad services and products. They're still making something, but I digress. But, it immediately became obvious to me that to be able to invest is basically to be able to do that entrepreneurial work tenfold a year, by finding people who have great ideas and helping them make them a reality, and helping them get your hoverboard. So that's a space that I want to participate in, but I think that can happen in the art world as well. That can happen in platforming, information and perspectives, the way that you do. And I think everyone is tempted to. You'll notice I am long-winded, because I think that there's value in trying to circle in more precisely on, the summation of my experiences. This is what things look like, and if we put those together, then we'll get something greater than the sum of our parts. And then when you make a global marketplace of that, without, borders or banks as a restriction, then something quite neat is very likely to happen.
Mhm. And do you still contribute to the art space, or because why I'm asking now is that I'll already tell you, like, because if you are connected to this digital space, so if you are creating art, then obviously you want to also sell it, right? So that's that's the reason I'm asking this question.
No, I haven't really created any art since school.
Ah,
Um, I did sell art while I was in school, but it was like pulling teeth. I was I was like even when I was on like a sub ramen budget, um,
but
I was just like, no, this is belongs in the dump. If I think that's good, then I'm saying that that's as good as it can ever be. No. And so it'd be like, we're gonna put this in the student show, and then we'll give you the money after. And so I was able to sell some stuff that way, um, and it was amazing, and it is great. And I've become less precious and pretentious about it, hopefully. Um, but basically at the start of the pandemic,
ah,
uh, I was like, okay, I need a bunker filled with hobbies, just in case I get bored, God forbid. So I got like a PS4 Pro and the Switch and an Oculus, and I got, in addition to that, I also got like sculptural clay and paint and like a huge roll of like 100 feet of like 8 foot tall roll of canvas. Even though traditionally I like working on board, you can get more detailed. It's an early Renaissance thing. But, and yeah, I want to make things, and I want to make things that leverage, 3D printing and digital experiences, but it's easier just to keep momentum in working on kind of like primary tech stuff, but more and more as my ability to appreciate art has grown back after the trauma of getting a fine arts degree. I've also wanted to be like, there are things that come to mind that I'd like to see and I could make, and that would be cool. Um, just for my own edification. Um, and another thing is, I want to show and tell that NFTs are more than JPEGs and GIFs of 3D renders. You guys, it's so much
I
more
was
than that.
getting to that. I was getting to that,
So I'd like
How do
to
I? No, the thing is, like, how do I even say, okay, this is worth that much, right? Of course, there's some explanation, but then, how do I explain this, artist or let's say my grandma, like, hey, this is worth X amount of money, and then it is, I cannot see it, I cannot touch it, I cannot feel it. It's nothing, right? So how do I explain that?
um
Or how
so
would you explain your own grandma, let's say?
the 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 business bro logic exists at the base level, which is the price is whatever the market will bear, bro. So, the value of a work of art is whatever the last person paid for it.
Yeah.
Um, and even then, that's only hypothetical. Who knows what
Yeah.
the next person will pay for it? Could be a down round, as we call it. um, but so on the level, that's it. That's the value of an NFT whose only like smart contracted logic is to prove that this thing is this thing, or as uh, followers of Rand would say, A is A. So this JPEG is this JPEG, and there's proof, and that's a screenshot of this JPEG because this is this JPEG, which is proven because super briefly, the blockchain is each block is a bit of information. So it's this is what the file size is, whatever is included in the thing, and then so that's the block of the pieces of data, and then it's chained with there's like a fingerprint on this side and a fingerprint on this side, and each of these are unique, and so the block behind it has the convex match to this concave one, if you want to think of it as Lego, that are like super unique shapes that can only fit together in one way. And so it proves that this happened at this time because it exists between these two blocks, which happened at this time. So there's no way to adulterate every single one of those blocks in the chain when you have to get everybody in the world to collude to change, or half the 51% of the people in the world to collude to change the information of a single block every single time on a chain. That's why you can trust that this happened at this time, and time, as Einstein taught us, is just a relative expression of a point in the universe, and so that's what an NFT that's just a JPEG is. It's just this thing can prove that it was this piece because it's also touching this piece, which is also touching this piece, and so they all hold each other's alibi of where they were. But what non-fungible technology allows for in you have an object that comes with it imbued the potential to contract in a whole suite of abilities, privileges, duties, etc. Say you have an NFT that comes along with a picture. Like part of the file is a picture of a concert ticket, the QR code concert ticket. What the NFT logic allows for, because you can trust that this is the legitimate thing and it's not just a screenshot of it, then you can allow for a lot of extra abilities, like extra access at a concert, or the fact that you got this concert validated at this time means that you have these unlocked capabilities afterwards, and you have a 1% stake in the song that debuted at this concert, leveraging something like Royal. You have something that can take a work of art and add interactivity to it, can add other dimensions to it that only the holder of that NFT could possibly access and prove that they are the one that has the right to access, or stewardship if you think of like a co-op or a community or secret society, whatever that work can do. But right now we're seeing GIFs of a screen recording of a 3D render and 8-bit JPEGs as the predominant use case. For the same reason that Beanie Babies were popular, for the same reason that tulips were popular. it's not that the NFT market is gonna pop like those, but maybe the provably rare but categorically common NFTs created in this time will have differing value that changes over time as market tastes change, but the abilities that those NFTs imbue will never diminish. So a concert ticket is done once you've used it. An NFT that gives you access to a concert can give you many other things because you can prove that you were supported this artist in real life at a time post-COVID. Obviously, don't necessarily go to all concerts right now.
I mean, I don't know if there is a post-COVID scenario. I'm just.
Post-COVID is Mars. That's code word for Mars.
Yeah. Maybe that makes sense then in your whole world. Elizabeth, it was wonderful. You have so much depth into this field. It was interesting conversation.
This is a treat. Yeah, rarely online do you end up in a place that you get to dive into kind of the fundamental reasons and movements going on all at once, especially. That's something that Clubhouse was like last summer. I'm
Yeah.
telling you, it was beautiful. It was like a summer camp mixed with TED, but like less pretension somehow. Or maybe it was like sneak pretension. But yeah, so this was a treat, and I appreciate speaking with you.